the journey of money that we are on, the step of insurance comes before investing.
Absolutely.
And that's what I think a lot of people forget most of the time.
Famous actors and sportsmen have insured parts of their body.
Yeah, J-Lo's protected her butt. And
Cristiano Ronaldo has protected
his
legs.
calves.
We were happy that we managed to find an insurance policy that had maternity coverage.
Okay.
But what we didn't realize was the fine print was written that there is a waiting period.
And I'm not going to have any insurance because I'm young and YOLO.
No, life is not about YOLO. Hi everyone, I'm Niyati.
And I'm Sayali.
And welcome to the Finance Happy Hour with FinCocktail.
Today we're going to talk about something super boring, but please don't tune out. We're going to talk about something super important as well. It's insurance. So Niyati, let's begin by answering the age-old question. What is the connection between insurance and investing?
So I think insurance and investing are two things that should be kept very separate. Primarily because both have very different roles in your life and in your portfolio. So when you talk about insurance, insurance is meant to protect, whether it's life protection or accident or health. Where there's various kinds of insurance, but the main job of an insurance policy is to protect you.
Correct.
The main job of your investments is to grow
Correct.
and take care of you when you retire, eventually, or at least take care of your financial goals in the future.
Correct.
So it's important that you make sure that your insurance protects you so that you don't have to then break your savings and your investments to take care of any emergencies in the future.
Correct.
So I think that they're very different and they play a very different role in your portfolio and they should be kept very separate.
Correct.
Now,
I agree. I was just going to say that their connection is that they are not connected.
Yeah.
And the fact that, you invest to achieve your financial goals and you insure yourself to make sure that you're protected. And like you said, just if you don't want to withdraw your investments at a subpar level unnecessarily, that's why you have to make sure that your insurance is taken care of before you start investing.
Absolutely. It's the first step. It's the step that you need to make sure that you've got covered before you get into any kind of saving and investing.
Correct. I agree. In the journey of money that we are on, the step of insurance comes before investing.
Absolutely.
And that's what I think a lot of people forget most of the time. And a lot of people are not insured in this day and age.
Yeah.
And I think, life insurance is a second step. But even after the COVID, the entire pandemic, after the COVID discussion, after the importance of medical health, people are still under or not insured.
Yeah, that is true. A lot of people only have corporate insurance, which is also a very big risk because, what if you get laid off? We're hearing of so many people getting laid off.
Yeah.
What if you're one of those? And then something were to happen to you, you're not going to be covered.
Correct.
So it's very important that you make sure that you've got enough insurance coverage. Now, whether it's life or health, we'll get into that a little later. But like I said, I think they're supposed to be kept very separate, your insurance and your investments. And I'm emphasizing on this a lot because in India, people love this plan called ULIPs.
Oh.
Unit linked insurance plans. And, this has been like an age-old thing where our parents have been investing in ULIPs and then it comes down to us. They've been investing in our names in ULIPs. And I'm not particularly a big fan of ULIPs because it does exactly what I don't like, which is mix insurance and investments.
Correct.
There is a certain part of it which is linked to market performance.
So it's not risk-free.
So it's not completely risk-free. And, you never know what that part will fetch you. Depending on the market situation, you can't really predict whether you're going to get that return or not.
Correct.
And if I were to play with that kind of, money or take that kind of a risk with my money, I might as well fully put it into my investments.
Yeah.
Why do I need to then link it to my insurance?
I agree.
You know? So
I
this
agree.
is something that I feel like should be kept very separate.
I completely agree. But I think it's still, you're right. We come from the, like, the age group where our parents were very, like, they thought that investing, matlab, life insurance khareed lo. And life insurance was not the basic term plan. They wanted ki, matlab, after a certain number of years, you get something back. Varna fayda kya hai, right?
Correct.
But the faida is that. The faida is, God forbid, if something were to happen to you, they will cover you, they will protect your family, your, dependents, your beneficiaries. That's the faida, that's the point.
Right.
That's when I think the thought process of looking at insurance needs to change a little bit. It's not like, oh, premium to waste ja raha hai. It's the same thing when you rent a house. Rent to waste hi ja raha na, technically. But you're still getting to live in that house, right?
Yeah.
That's the faida. It's still protecting you for till whenever you pay the premiums, etc.
Right.
So I think every single person who's listening to our podcast, who wants to follow us on this journey of money, who wants to take care of their finances, has to get their medical and health and life insurance sorted.
Yeah. So in today's day and age, there's insurance for all sorts of things, right? Like
Yeah.
there's health and life insurance are the two main kinds, which are applicable for the larger majority. But nowadays, there's so many different kinds of insurance also, where you can protect your home against any damages.
Yeah.
There's like a fire protection insurance. There's cyber security insurance.
That's the latest one.
Even these famous actors and sportsmen have insured parts of their body.
Yeah, J-Lo's protected her butt, and
Cristiano Ronaldo has protected his
calves.
Yeah, calves or whatever.
Legs.
I don't know.
Specifics in terms of body parts.
Yeah, so there's all these different sorts. Which ones do you think are sort of most important to have as a part of your portfolio, and why?
I guess it depends on your livelihood, right? Now, we are not Cristiano or J-Lo. So, our livelihood doesn't depend on a particular body part. It depends on our health, which, lets us go to work every single day and provide for our family and our entire life. So, I think on a general basis for everybody, I think medical and life insurance, term life insurance, whenever I say life insurance, I mean term life
plan.
Yes, a term plan is very important for everybody to get. Everybody, matlab, if you're between the ages of 25 and 35, if you don't have these two, please go and get it right now.
Yeah. Also, with term plans, what tends to happen is that the older you become,
Yes.
the premiums also become higher.
Yes.
So right now you may think that, oh, I don't have any dependents and I don't have to take care of
Yeah.
aging parents, or I don't have a spouse or kids to look after. But eventually, if that's how your life is going to pan out,
Correct.
then you might as well take care of it from now itself, rather than then paying those really, really high premiums.
100%. You can lock it in early. It'll be cheaper for you. But I guess that's a judgment call, right? Because if you are in your 20s, if you have your first job, etc., and you don't have that kind of disposable income to be able to stretch yourself extra to be able to afford that chotu premium also, it's okay, wait for a year. But do it earlier rather than later. That's all we're saying. Because again, premiums go higher. If you see that in your future that, chalo, everybody's parents are going to age, unfortunately, that is going to be a burden on you. If you see yourself with a family in the future, if you see yourself getting married, having children, etc., might as well have it from now. We spoke about us buying a home, right? Now, that is a huge responsibility. So if you have big loans over your head, like if you have a huge auto loan, a huge personal loan, huge home loan, it's very important that you get a term life insurance plan as well, because God forbid something were to happen to you as an earning member of the family and you have a big home loan, that entire burden shifts onto the other spouse
Yeah.
or the other family members.
Yeah.
And that ain't going nowhere because it's already there.
Yeah.
So I think that also becomes very important in a discussion of, getting a term loan. So yeah, if you're not, your livelihood doesn't depend on like a cute nose or like,
A cute bum.
yeah, then you need to get medical and life insurance sorted, term life insurance sorted for sure.
So, when people talk about getting term life insurance and health insurance and all of this stuff, one thing that people never really mention is how much should you get covered for.
Correct.
You never really know what is the right amount.
Correct.
So, in your opinion, what do you think is the right amount? Is there some particular sort of thumb rule? Or do you have to take a call based on your lifestyle and your, financial goals and your financial situation?
Yeah, absolutely. I think it's the latter because, like I said, if you have a huge loan on your head, then absolutely you have to account for it. Nowadays, there's this whole, I guess it's a marketing strategy where they're like, oh, get covered for 1 crore with only 400 rupees per month or something like that. So I think that 1 crore is a very big, fat, enticing number for you to like, just take, acha, you know what, let me just get a policy for 1 crore. Because it seems large enough that, oh, if something were to happen to me, 1 crore is a good enough financial, like, cushion for my dependents. But you may have a loan of 2 crores on your head for your home.
Yeah.
So no, it may not be enough. So there is a thumb rule that says that, you should have at least 10 times of your annual income as your term insurance policy, as your coverage.
Okay.
But again, now that depends on your lifestyle, the amount of financial liabilities you have, and also different earning members in your family. If you have very few earning members in your family other than yourself, then you need a larger insurance policy. If you have everybody is earning in your family and your contribution is like not that significant, then you can have a lower sort of coverage. Because what that affects, like how it affects you directly, is your premiums. The
Right.
moment you increase your coverage, your premiums go higher.
Right.
So it's a balance that you have to figure out. But yeah, what you have to take into account is your liabilities as a family and your earning sort of.
Are you the sole owner,
Yes.
or are there other members of the family that
who
also
contribute.
earn an income?
Yes, absolutely. So I think that's for term life insurance. And for medical insurance, now this, again, this is something that you have to take into account depending on your health history. Again, if you are the sole earning member, etc. But they say 50% of your annual income should be your coverage for your medical insurance.
Okay.
Now, why 50% is because if those ailments, if you ever fall sick and you have to miss work, that at least should, and they're assuming that you miss work for like a couple of months.
Yeah.
So it's still covered, it still sort of, covers you for those few, whatever months.
So when people are looking at buying insurance, there are so many different factors to consider, most of which get neglected or are unspoken.
Yeah.
It's stuff that people assume that or they assume that, you might not read the fine print.
Yeah.
There's co-payment clause, there are deductibles. Can we focus a little bit on these few that you feel are very essential to look out for when you're buying an insurance policy?
Got it. So, okay. Again, you have to figure out which insurance policy works for you first. Medical and term life insurance is a must for everybody, according to me. If you have a car, of course, your car insurance, etc., will also come by. But when you're selecting an insurance policy, the first thing that you will compare is probably the premium, right? And nowadays aggregators like, you have lots of these online aggregators that just give you a list, done, like, this premium, this much coverage, this premium, this much coverage. That they made very easy for you to do. So that is one, because you have to look at the price. But then you also have to look at the company itself.
Correct.
Because what they talk about is the claim settlement ratio. It essentially tells you how many times when a claim is made, do they actually settle the claim?
Right.
It should be 95% and above. So that means that more than 95% of the claims that are there
Get settled by
yes.
the insurance company.
Yes, so they give the payout. They
Okay.
don't sort of hold back. 95% and above is a good claim settlement ratio. It should not be lower than that.
Okay.
And then you go into the fine print,
Okay.
right? So you look at the price, you look at the company, and then you go into the fine print.
Sure.
Now, in fine print, the most talked about and the most sort of obvious one that everybody misses for some reason is the copay clause.
Okay.
Now, copay is थोड़ा self-explanatory, but co-payment. आप भी थोड़ा पैसा दोगे, मैं भी थोड़ा पैसा दूंगा, ऐसा. So, if I'm an insurance provider and you buy an insurance policy from me and there's a co-payment clause of whatever 20%, that means 20% of the amount of the bill you will have to pay. So, you are co-paying with the insurance provider.
Okay, so essentially if the bill is 1,000 rupees, then I'll be paying 200 rupees,
yes.
and then the balance will be paid by the insurance company.
Yes, yes.
Okay.
That's the co-payment clause. Now, why people opt for co-payment clauses, you'll be wondering, right? Because like the whole point of getting an insurance policy is कि मुझे नहीं पैसा देना पड़ेगा.
Correct.
Correct. The reason why people go for that co-payment clause is you get a higher coverage at a lower premium. Simple. The thing that you sort of
striking that balance.
Yes, that balance is within the premium and how much you will have to pay at the counter at the time of the emergency.
Sure.
Personally, I am not a big fan of copay clauses.
Yeah, because what if you don't have that kind of cash? You don't know what kind of a medical emergency you'll be struck with.
Correct.
And if it's something major and it requires a very large sort of bill settlement, then 20% might be a pretty substantial amount to be taking out of your pocket to pay for it.
Yep.
For it.
I completely agree. And more than that, I also think that अच्छा medical emergency चल रही है. I'm either in the hospital or somebody who's close to me is in the hospital. I don't want to be thinking about कि bill का कितना पे like मतलब how much amount am I supposed to pay up right now? कहाँ से निकालूँ ये तोड़ूँ या like it's too much stress to add on to your already stressful situation.
Absolutely, absolutely.
So that is the first one that I think gets looked over upon, but not a big fan. The second one I'd like you to touch upon a little bit because that's our favorite one, but it's called the waiting period.
Yeah.
It's something that you have experienced the hard way.
Yeah.
So so what waiting period is, I'll just go into it a little bit. Waiting period is from the start of your policy till a certain number of months or years. Till a particular coverage gets kicked in. Like for example, if I have very severe allergies. So there's a possibility that if I develop asthma or something like that, there will be a waiting period for that.
Yeah.
So my policy it's possible that my policy insurance provider tells me that if you develop asthma in the next 2 years or 3 years, it will not be covered. Yeah. It will be covered after 3 years because that means that it's not a pre-existing condition, which is also a point which we will talk about later.
Yeah, but you're right. This is something that I experienced very recently, and it's something that I wasn't very happy with. Because my insurance policy, when we got it, essentially said that they cover maternity insurance. So that, which essentially means that when you deliver and you have a baby, the costs associated with that are covered to a certain tune.
Correct.
There was a certain amount. But what we were happy that we managed to find an insurance policy that had maternity coverage.
Okay.
But what we didn't realize was in the fine print was written that there is a waiting period of 6 years.
6 years since you bought the policy.
6 years since I bought the policy for that particular maternity coverage to kick in.
That's a lot.
So when I was sort of trying to plan my finances around the pregnancy and the delivery, is when I realized that, this is something that I had accounted for, which isn't really going to kick in.
Yeah,
it's something that I'm going to have to start planning for last minute because I didn't read the fine print.
Correct. Absolutely. So I think waiting period, fine print is definitely something that everybody should look out for. And girls, if you are considering getting maternity insurance, please get it very soon. So don't
But
wait.
yeah, that's the thing with maternity insurance also, is that not many insurance providers
Give it
give
to
you a
Correct.
maternity insurance. There are like hardly one or two.
Yeah.
And that too, the coverage is not great. You know,
Correct.
you're always going to have to pay for a large part of the expense
Yeah.
out of pocket.
Correct.
It's
There are-
sad, but it's true.
It's true. That is true. There are some corporate insurance providers that
Absolutely
give a lot of maternity benefits.
Yeah. So corporate insurance, if you're getting your plan through your
Company.
company, then there is a certain amount that you can sort of get by default as maternity coverage. But you should definitely check for that. Girls, you should definitely check for this particular clause and this particular kind of insurance coverage if you plan to have kids in the future.
Yeah, because it's quite expensive.
It is. It's really expensive. So, you mentioned something about pre-existing conditions a while ago. What really does that entail, and what do you sort of have to look out for if you do have a pre-existing condition while getting an insurance?
So pre-existing conditions sort of, range from a lot of things. Like it can be something minor. Like for me, for example, I have allergies, I have sinus issues, but it can escalate as well, right? So sometimes they sort of include like asthma or something else included under it, because my grandmother has asthma. So I have that predisposition to potentially maybe develop asthma. Then there are other pre-existing conditions.
Like diabetes.
Yes, like
being
diabetes.
the most common in India.
Very common. Diabetes, blood pressure, all these things are very, they're common, and heart issues like cholesterol, etc. So these are pre-existing conditions. It could be other ailments as well. Usually what happens is, whenever an insurance company is giving you medical insurance, they are like, acha, you are fit and fine, I will give you insurance. Because as long as you are healthy, they are wealthy, right?
Yeah. Because they keep earning their premiums and they don't have to make those payouts. So why not?
Exactly. So मतलब ये अच्छा है, ख्याल भी खुद ही रखो, प्रीमियम भी आप ही भरो, and they are happy with that. But yeah, so if you are not healthy in a certain like in certain categories, then that comes under pre-existing conditions. Now that has its own clause of its own.
Okay.
Like they have a list, obviously. Sometimes they check for a few conditions.
Okay.
They also give you a form to fill out that are you an occasional drinker, are you a smoker, etc., etc. And according to that, your premiums are adjusted.
Okay.
Because then that tells you what you are like,
prone to sort of developing in the future.
Exactly. So, and most of the pre-existing conditions, what happens is they are not covered, but for a certain period of time.
Okay.
You'll be surprised. Most of these pre-existing conditions get covered in, let's say, 3 years, 5 years, 10 years down the line.
Okay.
So if you stick with that insurance provider and you keep making your premiums, those conditions also will be included
eventually
in
covered.
The future. Yes.
Okay.
And it makes a big difference, right? Because if you switch sometimes, again it goes ahead. Switch sometimes, again it goes ahead. And these things like, for example, if you are on insulin or if you have to take blood pressure medication, etc., these things add up every single month.
Yeah.
So I think, and every single year as like, you become older in life. So first things first, you have to be honest on your pre-existing conditions form, because if by mistake you don't disclose that you know about this condition and then they find out, your entire coverage goes away.
Oh.
Because you've given them a reason to not pay out the money.
So it's better to pay that slightly higher premium 100%. For having a pre-existing condition.
100%.
As opposed to just like sort of hiding this entire thing altogether.
Yep. Because come on, let's be honest, how hidden really are our lives? There will be that Instagram post or Facebook picture or somebody who sees you either drinking or smoking or, buying BP medication, and they will know that you had this condition and didn't disclose it.
Correct.
So I think first of all, be honest, and second of all, read the fine print again.
Yeah.
Because pre-existing conditions also have a waiting period where you are exempt for a few years and then they start covering it.
Okay.
So just reading about it will sort of, help you out.
Right. Now people keep talking about this, like top up and super top up, and it's like just so confusing. What is the difference between a top up and a super top up?
Okay, so the major difference between top up and super top up is that a top up policy covers one single medical health crisis or catastrophe in your life, and a super top up covers multiple. Like, even if you get hospitalized multiple times in the year, it's covered under a super top up and not under a top up.
Okay.
Both of these are add-ons to your base health policy.
Okay.
For example, now, like you mentioned, corporate health policies are good in terms of, sometimes maternity benefits. A lot of people are covered under the corporate plan, but it may not be enough because you may have more dependents, you may have just more medical needs. So on top of that, what you can get is a top up or super top up plan.
Okay.
Especially if you have like aging parents, it's a great idea to sort of get all the family under one plan and then get top ups or super top ups to just add more coverage at a reasonable premium.
Okay. Correct. Because obviously, if you try to get like different plans for different members,
How much
first of all, at that age, they might not even get
Correct.
the coverage, right?
Correct.
Here, at least your premium will go up, but at least they'll probably be covered medically.
Correct. They'll get covered also medically, and it'll become too expensive if you keep buying individual plans.
Yeah.
Yes, some people propagate getting individual plans for everybody just so that, you don't, one person doesn't exhaust the medical coverage for everybody.
Right.
But you can always get top-up plans and super top-up plans to increase your coverage.
Right.
See, these insurance providers are never going to say, ki, Acha, hame premium mat do, we will not give you coverage. If you're willing to pay more, they will always increase your coverage.
Absolutely.
You just have to keep a track of that. That's it. What would you suggest to, like, if somebody who is young in, like, the 25 to 35 age bracket, what would you say if that person did not have any insurance and was like, investing for the world, and I'm not going to have any insurance because I'm young and YOLO?
No. Life is not about YOLO. And this is like the biggest rookie mistake that anyone can ever make. Because like I said earlier, even before you start planning your investments and like do all this crazy like new age stuff like cryptos and like private equity and like all this NFTs and all this fancy stuff, do it. There's nothing wrong. Do it. But first, have your insurances in place, because you never know. Like, what if your crypto portfolio has crashed, which it would have for most of the people who've invested a year and a half, 2 years ago, right? At this point in time, their crypto portfolio has crashed.
Yeah.
With a crashed portfolio, if all your investments are in these kind of risky assets, how are you going to pay for any kind of emergency?
Correct.
How are you going to pay if you have to be hospitalized and you rake up a bill of like 5, 7, 10 lakh rupees?
Yeah.
That's a big amount, and that's the kind of amount that easily hospitals sort of bill you for.
Correct.
These days, people are just like, minor things you get admitted for, easily 1 lakh, 2 lakhs, 3 lakhs, just gone, 100%. Like that.
100%. And that also talks about medical sort of inflation, right, nowadays.
Yeah. Absolutely.
Because everything has just become expensive, and
so much more expensive,
including your kanda batata, your your medicines and your hospitalization costs have also like just gone through the roof.
Absolutely. No, so it's very, very important that you first sort out your insurances before you get to any kind of investing.
Correct. Absolutely. So I think that's it from us today on insurance. We can keep going on and on, but why don't you guys come back next week and stay tuned for our next episode.